Hello, my name is Finola Burke from RaaS, and today we're focused on purpose-led PropTech, rent.com.au, ASX ticker RNT. And joining me is CEO Greg Bader. Welcome, Greg.
G'day, Finola.
So, Greg, rent.com.au reported Q3 quarterly group revenue growth of 4% to 0.63 million, with particularly strong growth from the rent pay business. But advertising put the brakes on the core platform's growth. Can you take us through how you're addressing this?
Yeah, so look, it's a second quarter in the row where we felt the pain of advertising. The nature of renting, or the nature of our audience, means we're particularly attractive to first home builders and that sort of market segment. And what we've seen over the last, 6 months now is that various partners have either cancelled or more likely they're just pausing all their campaigns. They just simply can't deal with the orders they have, so they don't really want any more. And, exacerbated by trade shortages and all that sort of stuff. So wake up call for us, we need to diversify. Now, one of the really interesting things about us, we're obviously a geographically based platform in the fact that we're housing and that. So it's more a case about us articulating our value proposition to potential partners. We don't have the traffic volumes of, say, a news.com or even REA, but what we do have is very targeted, segmented audience. And what's really interesting is if I look at some of the other portals, they have about a 25% new customer each month. So, if you imagine if the big sales portals, they got the neighbours checking out the neighbour's property, all that sort of stuff. For us, it's around 75% new users each month, which reflects the nature of renting. And for an advertiser, that's really valuable. So that's what our focus is. We've come a long way. We haven't formally announced it, but we're very close to locking in a new partner rolling forward in the telco space. Once again, leveraging our capabilities to be able to tell a specific house what sort of internet options that those residents will have, and then presenting the right platform, etc. So nothing to announce today, but we are inches away, and we're confident we'll solve that, and that'll kick back in this current quarter.
I'll come back to that, but you've been investing in upgrading the rent.com.au website. Have you seen any benefits from that upgrade spend yet?
Yeah, look, we do. Part of it's BAU. I mean, nothing's static, so there's always opportunities to improve. Our SEO and digital marketing is in-house for rent.com.au. We just feel we get better value with our own staff. So a lot of the upgrades we've done were around improving the way we present out in the web when people search for properties, etc. So that's doing really well. We also took the opportunity to align our brand, etc., across all pages. Now, it's not 100% complete yet. There's still work going on. There's a technology upgrade underneath that, and we've seen significant performance improvements, so page load times, etc. But we included a table in our quarterly, and this is a table we have that we track against from a KPI point of view. And I guess what I wanted to show our shareholders was that even though we're only tiny, we're 25 staff, we bat really well for our size. Now, we're up against big guys who have many more properties than us because they obviously have the sales side as well. The things that matter, the net traffic volumes are important. We're about 700 KUVs, and on the page I showed in the quarterly, that's at 1.2 because that's just raw visits. But in the background of only 70, 80,000 properties being rented each month, that's still great traffic. The important stats for me, though, are things like bounce rates, page views, and time on site. Bounce rate's a really good one because it's people bounce off a site if they've come in and they're not getting what they're expected. So we're really pleased where we rank there. And we've also included rental rank, which is simply a averaged ranking based on the top keywords. So look, we benchmark ourselves against REA. We feel the companies are very similar in valuation. That's a joke. And that's, these guys have been doing it for a long time. They've got thousands of staff. They know what they're doing. So, look, we're pretty comfy where we sit. And as I said, I think we do really well for our scale.
And RentPay is enjoying very strong growth. You had record 30% growth in active customers in the March quarter. Are you happy with the progress?
Always want more, but progress is good. So for the last 3 months, what's been interesting for us is that one of the unique things about RentPay is the fact that we face the consumer. So people can choose to join RentPay. Now, that's been the focus of our advertising. So the last 3 months, we've seen about half of our audience come in that channel, half come in through the traditional agent-led side of things. So that's really positive. It's the first time we've done that on a sustained basis. We're also seeing payment types and some changes through there as well. So people off the street, we're seeing about 30% of people are paying with credit card. That's obviously so they can take points advantages and whatnot. We are the cheapest place you can use a credit card, and in the background we've got some extra work going on in that space as well. And then Pay ID as well, instant payments. We're one of the few that offer instant payments, and we've seen that really growing at the expense of traditional direct debit and BPay. So yeah, it's fantastic. Don't get me wrong, it's great. We've still got a lot of work to do. We're still talking to a lot of agents. We've got a trade show at the end of the month, Australia's biggest real estate trade show. We've got a booth there. So there's a lot of background things we're doing to increase that. But yeah, we're heading in the right direction, 100%.
And Greg, you've mentioned an ambition to help people to transition into home ownership. What's the plan there?
So this is, I don't want to say passion project because that'll upset shareholders, but to me, this is something that's important. The news is full every day of the crisis we have in renting, interest rates going up for homeowners, all that sort of stuff. So one of the biggest challenges, we've sat down with our customers, the biggest challenges that I face getting into a mortgage is around demonstrating serviceability and then obviously building that deposit. So we want to work out a model where we can do that. Now, the demonstrate serviceability is the simpler of the two. We have someone paying us $2,000 a month rent today. What if we encourage them to pay us $3,000 a month rent, which is about the same as borrowing $700,000 for a mortgage, and then we take that extra money and put it in a high interest savings account. So now the challenge is, how can I make that attractive for someone to do that via me versus doing it in the bank, which will offer an interest rate at market. So in the background to all this, what we've also done this quarter is last quarter, we've added a new rent bond partner. So we've seen our rent bond volumes nearly double. The loan book is growing considerably. That's going to provide us a real opportunity. So long story short, the opportunity is to allow our customers to, if you like, use their savings funds to fund rent bond and enjoy an above market interest rate. And then so aligning those and joining those together is what we're focusing on. Most of the challenges around licensing and regulatory, which we're well progressed. I think we reported 2 quarters ago, we've got our ACL, we're working through the AFSL side of it as well, etc. So the long-term goal here is that someone using RentPay, not only are they improving their credit score, not only are they getting market-leading pricing on utilities, but we want to give you market-leading deposit interest earning capability as well and demonstrate your serviceability. That'll all package up to present to a future lender a pretty compelling proposition, we think. The last component of that is to actually bring a lender in earlier. Now, the market's interesting at the moment for mortgages, a lot of focus on refi, and you're seeing a lot of bonuses and all that stuff going out there. But what the market tends to ignore, they're a little short-term focused in terms of they want to sell a mortgage today. But what we want to see is the lenders looking to cultivate their mortgages. So joining a renter when they're a year out, or joining a renter when they're 2 years out, there's a bunch of ways we can do that as well with different products or services. So to me, that will that'll be a bit of a step change in how people transition. I think there's a real opportunity for us to make that easier and beneficial to a consumer.
And Greg, you have alluded to a potential new partnership, but what else can we expect from rent.com.au in the final quarter of FY23?
Yeah, lots going on in the background. Rewards are important to us as well. And that's, I guess, 2 components. One is just a generic benefits. We face the consumer. So the package of value we offer to someone using RentPay, we always look into ways to increase that. interesting in the rewards market, the cashbacks, coupons, and all that sort of stuff. We're trying to steer away from that a little bit because some of them, to be honest, you're required to jump through a few hoops to get your rewards. But emerging in the market at the moment are card link opportunities where people paying with a credit card, if your credit card is part of that solution, then you automatically get cashback and rewards without you needing to do anything. The important thing for me is you don't need to change the way you do things. So we're looking at those. We think they're fairly interesting, especially with the fact that over 30% of our customers signing up off the street are choosing to use a credit card. So that's really interesting. The status one, I really like as well. And the beauty of the status one is that it's largely self-contained within us. So this is recognizing people's payment histories. You've hit 5 payments, 10 payments, and then offering rewards and incentives back to customers to continue on. The goal there is to engage more with our customers on RentPay. It's a funny conundrum, the fact that we're positioned and set up RentPay so it's set and forget, but at the same time, we want you to know we're still there and be part of your ongoing journey. We're going through, like any platform, we have churn, and the biggest driver of churn at the moment is people simply leaving us because they don't know that they can operate in their new property and continue using RentPay. So putting in a place where the benefits are accrued and over time will encourage people to do that. So that's something we're looking on as well. More payment options. Alipay, WeChat Pay have been on our agenda for a while, and that's starting to come together from a technical capability point of view. We think that's pretty interesting. We already have customers that are using it, but they need to jump through a few hoops and go through different systems to do that. So bringing that natively in our platform. So look, a lot of stuff in the background. We're also talking to various partners in terms of either augmenting their capabilities, they're augmenting our capabilities, different channels into market, different markets. So there is a lot going on in the background, and it's just head down, bum up.
Well, thank you, Greg Bader, for joining me today. I'm looking forward to catching up with you through the course of 2023 to check on rent.com.au's progress.